Okay, so today we'll talk about two financial attributes that you need to that we need to look at a given business. So I took real businesses as an example, and then we start from the businesses, and then we go and look at their numbers. Okay. So again, I just want to remind you that we started a journey of understanding the numbers um, because it's a language of business. If you want to be a good investor or you want to understand how businesses function, you should understand the numbers. So we started this journey and we understood that there are three kinds of financial statements: income statement, balance sheet, and cash flow statements. And we went through the income statement and balance sheet, and we found out how businesses, how much businesses are making in terms of gross profit, net profit, and etc. So we'll use the same concepts and we'll try to understand two variables in this session. One is earning per share, and the other one is PE ratio, price to earning ratio. Okay. So I took here 8 companies as an example. As you can see on the screen, we have 3 companies from India. So these are 3 companies from India. So Manapuram Finance, they are into gold loan business. So anybody need of money, if they have a gold, they can collateral the gold and get the loan from this company, and they charge interest on the collateral on the loan amount you collateral with them. If some reason a borrower could not fulfill their loan obligations, Manapuram mm, finance company can go ahead and sell their gold, the collateral that they put it with the company. So that's majorly they are into gold financing business. Okay. Then we have Swaraj engines. They are the one who makes the engines for the tractors. So they are part of Mahindra and Mahindra Group, and they make engines, tractor engines for small range to mid range tractors. And then we have the third company, Narayana Hrudalayam. Hrudalayam, it's a hospital in India. They also have a uh, they have also hospitals near US Caribbean islands. So they are into hospital business. So they treat patients in case of any health issues. So these are the 3 companies I took it from India. And then Meta. Anybody doesn't know Meta, this company?
I know Meta.
Yep. It's a Facebook, previous Facebook. They changed the name to Meta recently since last November, December. So now it's called Meta in the stock exchanges. So I took a Meta, the Facebook, and then I took Alphabet. It's a parent company of Google. And then I took Apple. So these are the 3 companies I took it from US. Okay, so we have Meta, Alphabet, and Apple. I don't think I need to explain you what are these 3 companies does. You all know, you have been using those their services. In fact, we are using Alphabet service, Google Slides, right now in our session. So these are the 3 companies I took it from India, and from Denmark I took 2 companies, Novo Nordisk and GN. I guess you all also know about these 2 companies. Some of your parents may be working, or you probably see this when you are going across Denmark. You probably see these logos quite often, Novo Nordisk and GN. Novo Nordisk is actually quite big. Even in India, if any of your parents are diabetics, grandparents are diabetics, they may be using the Novo Nordisk insulation for controlling diabetes. GN, I think many people knows. by the brand name Jabra. Jabra headphones are made by them. They also have other product categories. So these are all the companies came to you and asking you to buy them. These are the companies. They trade every day during the business days in these three stock exchanges. Indian companies are traded in BSE, Bombay Stock Exchange. US companies are traded in US, Nasdaq Technology, and then Copenhagen Stock Exchange. You can find Novo Nordisk and GN. So basically, all these 8 companies, those companies are for sale every day during the business hours through these exchanges. But the question is, you don't know which of them are good companies, which of them would give you good return in the future. That's the question. That's the puzzle that we need to solve by looking at the financial statement. It's not just financial statements, but that's what we are learning right now. So hence, so now I have these 8 companies that I can buy through uh, below these 3 stock exchanges. But before I make a buy decision, I need to understand these companies. Are they good companies or bad companies by looking at their financial numbers? So that's the journey we will take in this session today. Okay. So this exchanges facilitating me to buy a small fraction of business in any given day. So during business days, these all 8 companies come and they are ready to sell their shares in these exchanges. If I'm interested, I can go and buy them. So these exchanges are facilitating the option of buying and selling, right? So we talked about exchanges, how stock exchanges works, and how they sell by a fraction of the business ownership. So these are the 3 exchanges where these 8 companies that we are going to talk about are listed, or you can buy and sell through these exchanges. And then we have 2 terminals. I would say Screener is predominantly for Indian companies. So when I say terminals or screeners, this guys basically gets all the data for all the businesses that are listed in that given country. For example, ticker, they get the data of for all the companies all around the world. So they are not just limited to US or Europe. They are covering majority of the countries all over the world. Screener is covering only Indian companies. So we are using these 2 tools to get the financial data to do the analysis. If you are not using these 2 tools, what are the other option you have to go and get the financial data? You can get it from the annual reports. So, but the annual reports are quite cumbersome. So I can show you one annual report, for example. So I'm going to Screener. I'm going to Manapuram. And so if you see here, I see the annual report so you see the section below the page, annual reports. So if I click annual report for 2022, so I clicked on this report, and this is how many pages? 359 pages. So out of this 359 pages, financial data would be somewhere in 5, 6 to 10 or 20 pages. And it's very cumbersome to extract those data from the financial reports and do the analysis. Hence, these 2 guys are doing that job for us. So basically, Screener and Ticker, what they are doing is they are going to all the financial statements, and they are getting the financial data and put it into this nice format that we can easily understand and digest. It's like if you want to look at Virat Kohli average, you don't need to go and check each match and calculate it yourself. You can go to any quick info or some information websites where they already consolidated this data for us. Similarly, any football player, how many goals he made, all that is, you don't need to go and watch all those matches, right? You just get the number and then somebody is consolidating the numbers for you. So similarly here, that job for us is done by screener and ticker. They are actually getting all the data, so from for all these companies, and putting it in the nice format that we could easily understand and digest. Okay, so if you don't want to use the screeners, and if you want to go and get the raw data, you want to go to the raw data where the data is published, the best place is the annual reports. You go and get the annual reports, extract that data from the annual reports. Any questions so far? Is this making sense, what we are talking here? So now we are talking about 8 companies, where these 8 companies, they want to sell their business to us. And as an investor, now we need to investigate, are those 8 companies are good or bad, by looking at two variables, earning per share and price to earnings. Okay, that's the exercise we are doing, and we are trying to understand the data from these two tools, screener and ticker. Okay, so what is earning per share? Let's understand this in simple plain English. Don't make it very complex. Let's understand this in plain English. So earnings per share, we all understand, when any company or business, they want to raise money with the public, what they do, they go and issue shares. So shares, here I took an example of Infosys. It's listed in 1993 in India. When it was listed, it was 30 crore company, 30 million Danish crore company. As on today, let me go and check. Infosys. Ah, it's 636,750, 6,36,750 crore company. So it's grown a lot since 1993 when they listed, till the time now we are in. So every, when they list the company, when they list any public company, they issue a tiny fraction of the ownership. So the share certificate looks like this. You can see it on the screen, but nowadays it's also virtual. You don't get any more physical certificates. It's registered somewhere in the system, so it remembers that you own these shares digitally. You don't get a physical copy of a certificate. Okay, so basically, um, uh, n- n- we know what is the net profit the business has made. Where can we get the net profit amount for the business? Net profit is the money that the business made for a given year after they paid all the expenses. Where can I get this number from? Can anyone guess? From out of these three financial statements we talked, income statement, balance sheet, and cash flow statements, if I want to understand a net profit, or the money that the business made for a given year, where do you think we can get this number from? Income statement, balance sheet, or cash flow statement? Guessing is easy, right? You have three options, you need to guess one of them. So it's an income statement. So you can get the net profit from the income statement. So you take the net profit and then divide that net profit by the number of shares, outstanding shares. So then you get the earnings per share. So basically what you're trying to understand here is, for each share, because what are the units by which you would be buying the businesses, you will be buying it based on the shares. So even if you want to buy Manapuram, Apple, or Alphabet or Meta, you will be buying them in terms of shares. So now, when I want to buy tiny fraction of ownership by using shares, I also want to understand how much money that business made for that tiny fraction, whatever is the share. So that's what earning per share is telling us. Earning per share is telling me how much the business made for each share uh, that they have, that uh, that they have. So let's take an example of let's take an example of Manapuram. So let me go back here. I'll share it from my. So you can see my screen, right? So I'll go to. I'm going to screener and I'm searching Manapuram Finance. Okay. So in Manapuram Finance, you have a option of number of equity shares. So I'll take the screenshot here. So can you see here the number of equity share? So this is in crores. So uh, 1 crore equal to 10 million. Okay. So I don't know if you understand this. This is a Indian term. So 1 crore in Danish krone is 1 million Danish krone, because it's 10 times. So anyway, so they have the numbers in crores, and the outstanding shares they have is 84.6 crores. That's the number of shares this company Manapuram have currently on the market. Okay, so now let's go back. So I want you to remember this number, and then we'll go to income statement. So we are in this income statement of Manapuram, and look at the profit they made, net profit. Can you see this net profit? Mm, So the net, so we have a net profit amount here from the income statement, and for the last 12 months, the net profit is 1174. Okay, and so that's the net profit amount. And what was the shares outstanding? Can anybody remember what was the shares? How many shares they were outstanding? 84.6 crores. So they made 1170 crore net profit, and the outstanding shares are 84.6 crores. So if you want to calculate earnings per share, what you should do is you should get the net profit, that's 174 crores divided by 84.6. So that tells me how much is the earnings that the Manapuram share made for that given year. Is, is this making sense? So basically what we are doing here is we are taking the net profit amount from the income statement for last 12 months. That's 1174 crores after they paid. So this is the money they made, and then their expenses, because this is a finance company, so they have to pay their expenses or the interest amount, and then after all their expenses, the profit they made for that last 12 months is 1174 crores. And the outstanding shares, the shares that for this company is 84.6 crore shares. So if I want to understand what is the earning for each share is, I'm just taking the net profit amount from income statement, and where can you get the outstanding shares? You can get it from balance sheet. So you can get this from balance sheet. In Screener, they they publishing it as a number, but this number can be found if I want to understand how many outstanding shares that Apple has on given day. I can go to their balance sheet, last quarter balance sheet, and check how many shares they are outstanding. So so this number is coming from balance sheet, and this number is coming from income statement. So if you divide the net profit from the income statement with outstanding shares, you will get the earnings per share. Okay. Any questions? Anything you want to ask? So I'll make a note here. So earnings per share equal to net profit divided by number of outstanding shares. Okay. Where do I get the net profit number? I get the net profit number from income statement. Where do I get the outstanding shares, number of outstanding shares? From the
Balance
balance
sheet.
sheet. So let's take example of Manappuram. So for this Manappuram company, how much is the net profit they made? 1100 and 1100 and 1174 crores. Okay, and the outstanding shares they have is here. You can go, and I already got this variable 84.6 crores. So I'm dividing with each equal crores and crores, so I can directly divide that. So if I, where do I get the cal? Okay, I need to install. Can somebody do the calculation of 1174 divided by 84.6?
What
So
calculation?
1174 divided by 84.6. That's around 13.87 rupees. So for each Manappuram share, the amount uh, earning per share is 13.87 rupees. Okay. So if you want to do similar calculation for the other company, we have listed. Let's do the same for, let's do this for Meta. Okay. So let me go back to, because screener doesn't gives me uh, okay. So we calculated the earnings per share for Manappuram. So let me go back. Here I have numbers for each company. So okay. How much was the outstanding shares? So 84.6 crores. So I'll mark them here. So you understand the difference. It's not changing the color. It doesn't matter. So 84 point. What is the net profit they made? So 1100 and so if I go to Manappuram again and I look at this number, net profit from their income statement 1174. So 1174 crores. Okay. And so what is the EPS we got? So 1174 divided by 80 outstanding shares, 84.6. That's equal to that's equal to 11 13.87. So 13.87 rupees per share. Okay. So okay. So now let's go back and do this calculation for other companies. So Narayana Hrudayalam. So let's take again Screener because it's an Indian company. So Narayana Hrudayalam number of outstanding shares is 20.4 crores. So how many shares they have? 20.4 crores. These are the shares outstanding. And now where can I get the net profit amount for Narayana Hrudayalam?
Income statement.
Yeah, income statement. So I need to go. Yeah, I need to go to income statement and then I get this TTM is last 12 months because the financial year ends at March. So from March until October, it's not the full year, right? So they take the TTM last 12 months from the October. So that's 376 crores. So 376 crores. So now if I want to get the EPS earnings per share, what I should do, I should take the profit, net profit 376 crores divided by 25.4 crores outstanding shares. Then I'll get earnings per share. So 376 divided by 20.4. So they made 18.43 rupees per share. So this is the money they made for each share. So what does it tells you? So if you own Manappuram Finance Company as a owner for each share for a given year, you made a 13.87 rupees as a earning or the profit that belongs to you as a owner of that business. That's earning per share. But you can't say that that's the amount comes to your pocket. That's another story. I'll discuss that. But this is the amount that the owner of the business made for each share. If you own one share of Manapuram, then you got a profit of 13.87 for your ownership. Similarly, if you own Narayana Hrudayalayam, this is the hospital business. They are into hospital business, healthcare business, and there you made 18.43 rupees if you own this company. Should we do the same for Swaraj engines? So now I go to Swaraj engines. Can anybody tell me why we are doing this exercise? Because I've been offered to buy any of these 8 companies. If I want to understand which one is good, which one is bad, I need to understand what their earning power. The reason why we are doing the investment is we expect our money grows to more than what we are invested in, right? So how would that how would that how can that happen? It's only when the business where we are investing goes and makes more money, then only we would going to make more money as an investor. If they lose money, what happens to investors? They also lose money, right? So now I've been given an option of in investing in these 8 companies listed here, and I want to understand what is their earning power. This is the muscle power that the business has. Um, so now I'm calculating the earnings for each business. So now we calculated the earnings for Manapuram, and we also calculated earnings for Narayana Hrudayalam. We are doing a similar exercise for other business, Swaraj Engines, Apple, sorry, Alphabet, Meta, and then we do um, for Apple, and then we do for Novo Nordisk, and then GN Store. Okay, so let's go back here. So for Swaraj Engines, okay, they have only 1.21 crores outstanding shares. So how many shares they have? 1.21 crores. Can you see the difference? Each company, the numbers of shares they issued are different. For example, Manapuram, they have 84.6 million Danish shares that are being issued. Okay, these are not, yeah, crore shares. This is not money. It's share certificates they issued. Crore shares. Okay, so Narayana Hrudayalam, they issued only 20.4 crores. In other words, 20.4 million shares. And for Swaraj Engine, it's only 1.21 uh, uh, crore shares. Is it good or bad having many shares? So now we just looked at 3 companies. One company has 84 crores shares, 84 million. Another company is 20 crores. Other one is 1.21 crores. What
I think
does
it's
it tell
good.
you?
It's good to have more shares.
Why? Um, uh, Having more shares means there are many people wants to buy and sell the shares. That's the reason you see a lot of fluctuation for these companies where they have more shares, because so many people who are buying and selling and betting the shares. If you have less shares, what happens is very few people are uh, trading those shares. That means it's uh, you could also say, in other words, it's very few shares that shares in a given day, because the number of outstanding shares are very few. Another angle is you need to look at out of these shares, not all the shares are traded in given day. Do you know why? Can anybody think why not all 84 crore shares of Manappuram is not traded on given day? Because Manappuram, probably promoters, suppose you are the owner of the business, you own some shares. So let's look at the shareholder patterns. If you see here for Manappuram Finance, the promoters are the people who started this business. They are owning 35% of shares, 35.18. So if you look at here 84.6, so promoters are owning how much? 35.6. So 35.6, right? 35.18, yeah. 18%. Can anybody tell me what would be the 34.18% of 84.6 crores? So I go to the calculator. So I have 84.6 crores. If I want, sorry, 84.6 crores. If I want 35%, how do I do that? 35.18. So that's 29.76 crores. 20. Hope you all understand this. How do you calculate 35% of 84 crores? It's 29.76 crores. So at any given day, do you think promoter is trading his own shares?
No.
No. So that means definitely out of 84.6, 29.676 are not traded in the market. So how many shares are left out? So let's do that calculation. So out of 86.6 minus 29.76. So only 50 remaining shares, 54.84 percentage. 54.84 percentage. Sorry, 50.84 crore shares. But again, if you go back to Manappuram, you see these are financial foreign institutional investors. FII stands for foreign institutional investors. These are the guys who brought the money to India from foreign countries. So Fidelity is from US. So this guy is owning 28% shares. I don't think they would be sharing and trading on regular basis. And then these are DIAs, domestic institutional investors. These are the mutual funds and all these guys. They own 12%. And the public like you and me, they own 24%. So if you look at screener, it also gives you the volume that is traded. So if you see here, volume. So now if I filter with volume, I get the volume figure. So today is 30th October. What was the date on Friday? 28th of October. So on 28th of October, can anybody tell me it's 2.3 crores shares are traded on 28th of October. Can you see here? It's on this date, 5th of August. It's almost 3.6 crores of shares are traded. Do you understand this logic? The volumes of the shares is exchanged on that given day, number of shares exchanged. So we have total for Manappuram 84.6 crores of shares, and owners owns 29.76 crores of shares, and the remaining is owned by public and institutional investors. But on given day, only 2.3 crores of shares are shared. For example, so this 2.3 crores of shares are exchanged on Friday for Manapuram. Is this making sense, or is it too
Mm,
complicated for you?
it makes sense.
Yeah. Okay. So that gives you an idea how much volume is traded and who is driving the share value on that given day. Okay. So I just took this. You need to think through similarly when you are looking at the outstanding shares. If I number of outstanding shares, these shares are owned by promoters slash institutional investors, pension funds slash public like you and me. These shares are all the shares owned by all the people that can own. The possibility of all the people who could own. So it's including all the ownerships. Okay. So for Swaraj engines, we have 1.21 crores of shares. Okay. Now I want to know the net profit that Swaraj engine made. So I go to the income statement and look at for TTM. So they made, is it visible? Should I need to make it little big? So they made around 115 crores. So how much? 115 crores. So now if I want to calculate earnings per share for Swaraj engine, so what I would need to do, so I need to multiply 115. That's the net profit the shareholders made for given years divided by the number of outstanding shares. That's 1.21 crores. So now I use calculator. So 115 divided by 1.21. So they made 95.04 rupees per share. Does this make sense? Any
Yeah.
question? Okay. So let's do the similar exercise for Google Alphabet. Again, I just want to remind you why we are doing this, because I want to see the strength of the business by looking at their earnings power and what market is offering me. So that's the reason. Oh, why are we doing this calculation? Can't I get this number directly from screener for Indian companies? Yes, you can get it, but you need to sense what does that number tells you. That's the reason we are doing this exercise. If you see for Swaraj engines, you have something called EPS, earnings per share. It tells you already 95. That's exactly the number we got when we calculated, right? 95. So but you need to sense what is that number telling you. It tells me if I own one share of Swaraj engine, the money that share made is 95 rupees for that year. That's the earning per share. Similarly, if you look at Manapuram, so you have a direct attribute EPS, earnings per share, 13.9. So I think we got similar, yeah, 13.87. So you could already get this from the screeners or ticker terminal. But the reason why we are doing this calculation is so that you need to understand the logic behind it, so that you need to understand how the financial statements are used to calculate the financial strength of the business. That's the reason we are doing this exercise. Once you understood the logic, next time you can directly extract this information from screener with this variable EPS. You don't need to calculate this all the time, but you need to understand the logic behind it. Okay. So let's do the similar exercise for Alphabet. So Alphabet, we need to go to ticker. So I'm on ticker. So I'll search with Google. So that's the Alphabet. Okay. So now what are the two numbers I'm looking for? Outstanding shares. So if you go to overview, you get the outstanding shares here. Okay. It's 12,943 million shares. Okay. So can anybody tell me what is that in billion?
Mm, 0.012.
Oh,
Zero.
1,000 million is 1 billion. So it's 12.9 billion. So you just take the three zeros here.
Oh, it's 1,000. Then it's 12.943.
Yeah, it's 12.943 billion shares outstanding. So now I go to Google. Here I'll type 12,943. Okay, so now I need to know how much net profit Google made. Where do I get that number from? I go to financials. I look, you see here income statement. They also have balance sheet and then the cash flow statement. But we are going to income statement because this number is available in income statement. Then I need to look for, put, yeah. So then I need to look for net profit. Yeah, net income, whatever. The net profit, net income, both are same. So that's 66,990 million. These are all in million. So that means 66.990 billion. So that's the, it's in millions. Okay. So that's the net profit they made. Now, if I want to calculate earnings per share, what should I do? I should take the net profit amount and divide that by number of outstanding shares. So net profit amount, divide that by number of outstanding shares. So that's 66,990 divided by 12,943. So that's $5.17 per share. Because this is in dollars per share. Okay. So that's the amount, that's the money we made for each share. Okay. Would you do the similar exercise for other companies by next week? So I think you can get this from Ticker. So you can do this similar exercise for Nova Nordisk and GN. I don't think a free version of Ticker would allow you to do it. But what you can do is you can extract this from the different sources. So what is this? You go to Morningstar. You can extract this information from Morningstar. So if I want to, because Ticker doesn't allow you to extract for other countries until you pay them. I have a paid version, hence I can able to see it. But for you, if you want to do this exercise, you have to use this website, morningstar.dk. Okay, I'll put it in the WhatsApp group so you can get this. So if you go to Morningstar, so no one on risk. I'm not that good with Danish, so let me translate to English. Okay. Oh, yeah, you can see the income statement. Doesn't it's Not that. Okay, key figures. I here. Yeah, you can get the gross profit, net profit. They gave the percentage, but they don't. They did not give us the number. So I'm looking for the number. Just
Aren't we looking screener for it?
Nova Nordisk doesn't have. It doesn't list it here because it's only for Indian companies. So the
Oh,
free
okay.
version is only Morningstar, or I think Nordnet should also have it. Let me see. Because these are Danish listed companies. Yeah, where do I get the financial numbers? Okay, I'll try to find a screener for you that you can use for Danish
Yeah, I
companies.
got a question.
Yeah,
Isn't Novo Nordisk Danish?
it's a Danish company. Yes.
Then why did it show the American flag?
Sorry,
It showed the American flag when you're looking at its stock.
does it show the American flag?
Yeah.
Doesn't Novo Nordisk also trade in
US,
the New
yes,
York Stock
yes.
Exchange?
Yeah, it doesn't matter. So yeah, the flags, yeah, they also traded across the world. Even in Germany, they traded. So it probably the reason. But so please do this exercise for other companies. I want to share one another thing before we close. So now we calculated, we get some more fun facts based on this data. So we'll build based on these 8 companies. So we will build some more insights based on the exercise we did. So please go back and revisit this exercise we did today. And if you have any questions, please come back. We can discuss. Okay. So the fun part I want to show you is this one. So what I have done here is, so this is the mm, income statement of Nova Nordisk. So what I did is I went to Novo. So I used ticker terminal and then I took the income statement, and then you have an option here. Can you see here copy table? So if you press on copy table, it copies the whole table, and I want last 10 years. So I took back. You can drag this icon here, then it gets you the data for that year. So I want last 10 years. So I got it from 2012. Okay. So then I used copy table. So it copied all the data for last 10 years, because I want to see how, if you want to select Virat Kohli or any player, you would look at his last 10 years performance, right? 5 to 10 years, whatever the career he has gone through. Similarly for business, I want to look at their performance for last 10 years. So that's the one I copied here. So I went to the Excel. You can simply paste it here. So if you use Control V, you can paste the numbers, and then you can simply get all the numbers here. So I got the numbers using that option, and then I did simple analysis. So this yellow marked rows are the ones that I have added manually just to do the fun exercise. I want to look at the numbers and look at how they are doing. So what I did here in row number 8 is I want to understand whatever the revenues that Novo Nordisk made for last 10 years, so from 2012 until 2022, whatever the money they made, I want to understand how much percentage of that money revenue they spent on cost of goods. Can anybody tell me what is the cost of goods? It's a cost that the company is spending to make the goods. For example, Novo Nordisk is into the business of making insulin. For producing insulin, they need raw material, etc. So that's the money they spend. So if you look at cost of goods comparing with the revenue, so basically you can simply take the revenue and divided that to the cost of goods and multiplied by 100, you'll get the percentage. So these are the percentages I got. So Novo Nordisk is spending on an average 17 to 16%. If you see 2012, they spent 12% for COGS, cost of goods sales, 13, 17%, 16%. So they are in the range of 16 to 17%. And their gross margins are 82 to 83%. That's a phenomenal number when you look at it. That's a great percentage. But now when you come to the selling general and administrative expenses, that's the employees cost and all the costs, they're spending around 30%, 30 to 20. You see it varied from 32% to 29%. So they are spending around um, 30 to 29% on the administrative expenses, salary that they are paying from all the way from CEO to the employee who are at the lowest level, all that expenses covered here. Okay. Then in order for Novo Nordisk to produce uh, advanced medicine, they are spending money on R&D because they have to come up with a new medicine every not every year, but every for the future, because otherwise if they can't invent a new medicine, what happens? All their existing medicines that they are been selling, they come out of the patents and then they lose the business. So they need to spend money to be competitive and come up with the new medicine. So they're spending around 14 to 12% of their revenue for the R&D. Okay. And I also did a fun exercise. I want to see if Novo Nordisk is paying enough tax to the Danish government. So I see it's a consistent. So they are paying 23 to 20% tax. So this is all fun things you can do once you understand the number. So now by looking at these numbers, what story I can tell to any layman who is walking on the street, I can tell them, hey, Novo Nordisk spends 16% of their 16 to 70% of their revenue. So let's say if they made 100 crore, 16 crore goes for the cost to make the medicine. Okay, out of whatever 83 crore, 82 to 83 crore left out, in that they spend 32% to, sorry, not out of this. So this is on top of the revenue, so it should be um, yes. So it's on the revenue. So on the revenue, they're making that they're spending 32% of money for their employees and administrative stuff. So out of 100 crore, 32 crore goes for employee salaries and administrative stuff. 14 crore, 14%, 14 crore goes for R&D expenses. 17 crore goes for um, cost of goods sale. And then whatever is left out is the net profit. As a owner, if I own this business, I'm making 42% of the um, uh, no, not to 42%, 32%. So if you see here, 27 to 32%. So this is the, for every 100 crore, owner's earning is 32 crore, employee's earning is 30 crore, goods for making the medicine is 17 crore, and R&D expenses for the future medicine, whatever the research they are doing, they are spending 12 to 14 crore. So that's the story you should able to tell by looking at the business. That's the goal we are trying to achieve by going through these sessions. Is this making sense?
Yeah.
Okay. So we will do this exercise. So now you have a project work, call whatever you want. Go to the slide deck and try to figure it out. Earnings per share for Alphabet. I think we did for Alphabet, and I also did for Meta. So you need to do for Apple, uh, Nova Nordisk, and GN Store. And based on this, I'll tell you further stories next week. And we haven't decided which company to buy yet. I still need to do research. We still need to do research because now we are just looking at their financial strength. Okay. With that, I want to conclude the session here. Any questions before we close? Hope this is useful. And my goal is sometime in January, February, I will ask you to pick a company and tell a story about that company. Then you should able to tell me a story of that company looking at their numbers. That's the goal we are aiming for sometime January, February. Okay, so November we would focus on this financial statements, and then some weeks in December as well. But January, I want you to pick up any company in the world and tell me the story. Is it a good company or bad company by looking at the numbers? That's the goal we are working towards. Okay. So with that, I wish you a good weekend and we'll talk again next week. Thank you.
Thank you.
Bye.